Good morning, this is Stewart from We Sell Homes in Paradise. A quick one, well, relatively quick. I had a good session with Masha teaching her about investment simulation, so I thought I'd make a recording of how we work through it and help our customers not only find a beautiful home in paradise, but a great investment in paradise. So I'm going to share my screen and just walk you through what we actually do. So here we are. So one thing I would like to do is share with you my screen. So basically, when we have customers that find a nice property, of course, they also want to know whether it's a good investment and whether they can rent it out. So this is a good example. This is the links in Al Qadesa, beautiful frontline golf apartments, luxury in fact, with sea views and a short walk to the beach. I think this picture summarizes or captures exactly what's on offer here. Great amenities as well with the indoor wellness center and gym. I think there's even co-working spaces there, which is really interesting in these times. So one buyer was interested in this and he wanted to know if he rented it out for half a year, how he could generate rental income. And we advise that there is still a good short-term rental market here, particularly in the high season. So what we do is we create something called an investment simulation, and we do it in an Excel sheet, which we share to customers, but I'm going to show you just a PDF version of it. So here we have it. So we send this to customers, and I'm just going to work you through the main fields so you understand. So essentially this property, if I can highlight things with this yellow pen, is actually priced at $415,000. You can see it here highlighted. And of course there's buying costs. The buying costs are 13%. It's a new property, so you can see that there highlighted at 54,000 euros. So the net spend for this particular purchase would be about 469,000. Now, at the same time, when you buy, you also have to consider that there's community fees to pay as well as EB. So we put these into the investment simulation as well. So 200 a month for community fees, and IBI is 700 per year, as you can see here highlighted. Now, what we do is we benchmark the property and make sure that we give accurate figures of what it could be rented at. Now, this is a 2-bed apartment, it's luxurious, so we look at places like Booking.com, Airbnb, and we figure out what a benchmark property could be. So looking on Booking.com, plugging in some dates, which would be, let's say, the first week of August, as you can see here, full week, and sleeping 4 adults. These are what is returned. So you have basically double rooms in a hotel at 5,400. You also have this apartment at 1,292 for that week. I think this is a good example because it's a 2-bedroom apartment and it doesn't have sea views, and it's not really the highest spec. So 1,300 per week for this particular apartment. So we like to keep things conservative. We believe there's definitely an upside, but we're going to use high season rent of 1,300 per week, which I've highlighted here, and 186 euros per day. So the owner wants to use it about 150 days of the year, so January to March, and also November and December. So you see here the days used column here, and you can see I've highlighted January, 30 days used. And you can see as I scroll down that there's all the days where he's using or not using. Now, the interesting thing to say is this. Obviously, there's a high season rental amount, which is 1,300 per week, but you can't command that every single week of the year. So we apply something called a percentage of high season, which if I just switch to a pen here, well, to the highlighter, you can see that in January, we use 50% of the high season rent, same again in February. Of course, in high season in July and August, it's 100% of what you can get in the high season rent. And at the same time, we look at occupancy level, this column here. Of course, in the winter months, we don't expect to be fully occupied. In fact, in January, 1 week per month, 25%. And then, of course, in the high season, we expect high occupancy, about 90%. Of course, there's changeover days where you're going to lose a couple of days, okay? But essentially, the average occupancy is 66%, as you can see on the bottom here, which equates to about 30 weeks out of the 52. So I think we're being conservative. And then what we do is we calculate for every month where it's actually available to rent, what the rental income could be. And so it's a simple calculation. So in this particular month of April, we've applied the high season rent, multiply it by the percentage of high season rent which you can make, multiplied it by the occupancy level to get your gross rental income of 2,925. Then, of course, you'll likely be using a property manager. They normally charge about 15 to 20% on the rental income. So in this particular month of April, that equates to 585 in property management costs. And if we go across here, we do a net figure, which is basically the total less the fees. So it's the gross rental income minus the property management, minus the community fees, and minus a share of the IBI, the property tax. So he would make net about 2,082 for the month of April, renting it out or being available to rent for the whole month. Then, of course, we like to go one step further. We talk about taxation. If you're a non-resident, it's 19%. So the tax would be 396. And then you get a net figure for April, which would be 1,686 euros. Okay, so that's a rental income in the owner's pocket. Now, of course, we aggregate everything for the year, and then we get a final figure. So the gross rental for the year would be 25,000. The property management for the year would be about 5,000. Net of all fees like property management and community fees and IBI, 17,000. And then when we take off the tax of 19%, which is 3,200, we'd get a net figure of 13,844. So this is a cash generated for the owner for 1 year of renting on the short-term market and using for 150 days himself. Now, of course, if someone has a small mortgage, we can apply the mortgage here in this column so that we can deduct that mortgage amount. This is a cash buyer, and he's looking to get as much bang for his buck without a mortgage. So we have 13,844, okay, in rental income. If we go further down, you'll see that we also look at the return on investment. I won't go into too much detail here, but essentially the investment was 469,000 because it was a 415,000 property plus buying costs. Then you've got to add the rental income he's made, and we talk about appreciation. Now, the first year when you're delivered a property that's new, there's normally a good uptick in value, about 10 to 15%. And then you've got the average increase in value across Spain, which has been 4 to 5% in the past, but we've toned it down to 3%. Costa del Sol is still a very attractive area, good demand. And I think 3% is a fair figure. So when you apply those two factors together, the uptick in value for a new property and the general appreciation, this property would appreciate by about 51,000, which is 13%, which would give it a new value of 466,000, okay? Now, the interesting thing about this is the return on investment, if I just remove that, is not just the appreciation. It's obviously you have to add in your rental income as well and divide it all by your net spend or your actual investment, which was 469,000. We also deduct capital gains for the appreciation, okay, or we accrue for that. So the net is 42,000 made over a 469,000 investment, okay, for appreciation plus your rental income, which gives you a cumulative ROI of about 11.9%, a return on investment of 11.9%. At the bottom of these investment simulations, we also do a cash flow simulation. So in this particular case, it's a new property, what the reservation would be, what they have to pay after PPC or at PPC, which is normally about 30 to 45 days later. And then there may be a further installment, in this case 20%, so another 20%, 83,000 in 90 days. And then what they would need on title deeds or the completion, which would be 60%. So this is what we do. We'd love to share with you directly on a Zoom call, but essentially we're very comfortable running numbers. We're very comfortable helping our customers not only find a great place in paradise, but a great investment in paradise. Thank you for watching.